Everybody, welcome to the morning market briefing. Wednesday, off on Mondays. Wednesday, June 22nd, 2022. Sorry about that. Had a little technical glitch, but good to go now. Looking around today, nice day yesterday in the markets. I think everybody was nicely surprised to see some real strength on the equity front, especially. But right now, Dow futures down about 1.4%, S&P futures down about 1.6%, NASDAQ down about 1.7%, oil getting beat up a little bit, down close to 6%. So a red day here. We do have an opportunity to hear from President Biden today at 2 about a gas tax holiday. Ben, what's he going to say?
Yeah, so what he's basically going to do is he's going to ask Congress to enact a 3-month gas tax holiday. This is a federal tax. Different than the state tax. It's 18 cents a gallon on gasoline, 24 cents a gallon on diesel. I don't think it's actually going to get through. Pelosi has questioned the efficacy of whether it actually create lower prices. You got Republicans who say that, it's one of their biggest talking points is the whole gas inflation scenario. So they don't really want it. And then you also have Democrats in Congress who are concerned the policy would undermine highway maintenance because it's going to draw down $10 billion from the Highway Trust Fund. Biden's going to try to use other federal funds and allocate that toward to supplement and refill those coffers of the Highway Trust Fund so that the Highway Trust Fund isn't drawn down. I think it's going to be extremely challenging to get this done. In his speech, he's also going to encourage states to enact their own state gas tax holidays, which of course we've already done in Georgia. And he's also going to call on refiners and retailers to funnel through more savings to consumers. He does not like the profits the oil industry is making. The Chevron CEO actually published a letter yesterday asking for more support and a quote change in approach to policy. And he doesn't like the criticism that the administration is laying on the industry. Biden's response was, and it was kind of off the cuff, but I think you also get a sense of where his priorities lie. He says, quote, "I didn't know they'd get their feelings hurt that quickly." So I think ultimately you're going to have this back and forth and both sides are kind of intransigent in view. The Biden administration thinks it can get gasoline prices down by a whole $1 between the federal tax, state tax, and lower refinery profit margins. I think the big piece that knows that the big moving piece of the refinery profit margins because the tax issue is just not going to move the needle a lot. Oil is helping this morning and may continue to help. I'm curious as to why that's happening.
Yep.
It seems like there were a lot of late longs in this oil, kind of speculative longs that are now bailing out, which is reducing some of the froth in oil. But I don't disagree with the Goldman analyst who says that oil prices will probably go higher.
Yeah, it's interesting to me. I mean, the $1 a gallon thing certainly would be a big political victory. I would think if that could happen, if you could say, hey, mid-June gas was X, we've knocked $1 off of it. We've done everything we can. It's a big win. But I mean, you're exactly right. It's actually the refiners that are going to have to take the majority of that. Even if you can get congressional support, we're talking about 18 cents out of the $1 that he's wanting to save. So although that's a big shiny sticker price, to maybe trot out in campaign ads, things like that. It's hard to see that happening. And it's really hard to see Chevron and others want to play ball. I don't disagree with the Chevron. I'm not super pro big oil or what have you. I'm not a big gas guy. I drive like 2 miles a day, but it's kind of interesting. I think they're completely reasonable to not only ask for a change in approach, but also to have a different style of communication about the industry. I mean, as long as Democrats have been in office, going back to the beginning of last year, oil and gas has been the enemy. They've been the bad guys. Even when this crisis wasn't going on with gas prices, they've been the bad guys. They've been positioned as such. So the notion that their feelings were hurt quickly seems a little bit hollow. I mean, honestly, the feelings getting hurt thing is borderline Trumpian in terms of a quote. I mean, we hadn't had a good jab like that in a while from the president.
Yeah, delivered very differently, but similar comments. I would just make 3 points here. Is that from a purely economic standpoint, and you can disagree with the economics of it, but this is classic economics. You start to impose caps on the profits refiners make. Guess what? Fewer refineries are going to be built. Because you lose that profit motive, you lose those returns on capital, and therefore it's more difficult to raise capital. You're going to build fewer refineries. That's just simple markets
and
economics 101.
That's not unique to the energy space. I mean, that's on everything. I mean, there's entire energies that have gone away because the government has come in and said, hey, you can't make excess margins on it.
Yeah. So basically you're hurting, you might be helping gas prices now, but you're really shooting yourself in the foot long term. Number two is one of the big things for refineries right now is the environmental permits. That raises the cost and risk of building a refinery. That also dissuades new production. And then, if we were really serious about this, let's do a Defense Production Act. If gasoline prices are critical to national security, which I think is debatable, but if you are of that ilk and you would argue that to the extent that you're actually going to draw down the Highway Trust Fund in order to subsidize a tax cut, then I would argue then that logic also says that this is a vital national security threat, and therefore let's actually invest in this on the national stage. You can debate whether or not that's right, but I think that would be the most consistent policy. The problem is it's all been politicized right now, and I don't think we're creating long-term solutions.
I mean, it seems like in the best case scenario, refineries are going to be less inclined to do more, and maybe more people buy gas, which is not going to do a whole lot in terms of sustaining lower gas prices.
Right.
Powell is giving testimony today. He's going to need to talk about the slowness in moving to combat inflation. It's going to have prepared remarks coming out probably anytime. The testimony starts at 9:30. Ben, anything in particular you're looking for?
I think this is front and center why the market's down right now. We had relatively hot UK inflation data. It was expected to be hot, 9.1%, I think it was this morning. And then you got Powell, who is now going to be testimony, and he's going to basically be defending over the next 2 days. He's in front of the Senate today, and he's going to really see the fireworks in front of the House tomorrow about why he didn't do more to combat inflation last year. And he's going to have to defend that, and he's going to talk about how inflation is a real problem and that how he's optimistic that it's coming down, but we want to see clear and credible evidence. And I think that could get the market a little skittish. And I think that smart investors, what they're doing is they're taking a little bit off of the gains off the table from yesterday and staying to the sidelines ahead of these prepared remarks. But I think ultimately Powell's probably going to say similar to what he said a week ago, and therefore we might actually have a relief rally on the back half of this into the end of the week.
This is super random, but on the inflation topic, I actually just teamed producer Logan. Maybe you could throw this in the Zoom chat, a link. The New York Times has a pretty cool tool out there where it asks you a bunch of questions over the last year, and it calculates essentially your projected actual rate of inflation. So you can go in and say, hey, I bought a new car. What's the impact of that? Hey, I'm a vegetarian. What's my inflation look like? It's kind of interesting. I was playing around with it yesterday just to kind of see what's driving it. It's nothing all that surprising if you've been listening to the morning calls where we kind of break down CPI and what's moving the needle. It's very much on trend with that, but it's kind of interesting to take a look at. Interesting article out of the Wall Street Journal. Wish Tom was here to talk a little more about this, but it really kind of underscores the theme of a lot of what Tom's talked about on this call. So certainly in the Q&A last Friday, as it relates to individual bond ownership and the benefits of that. They talked a good bit about closed-end muni funds and the challenges they were facing as of the end of the week with their asset values being down, people selling begets more selling, prices go down, leverage has an impact. Pretty interesting read.
Yeah, I mean, a lot of these funds are levered they don't have crazy leverage, not insolvency leverage, but it's designed to reduce returns a little bit and make it more attractive and attract more inflows. And they borrow short term, and we all know short-term rates have been rising faster than long-term rates. Therefore, their borrowing costs are going up, and the benefits of that leverage are diminishing. So that's number one. Number two is they're being forced, because of these liquidations out of the funds, they're being forced to sell these bonds at discounts such that the NAV of a lot of these funds is about 8% higher than where they're trading. One of these Nuveen municipal bond funds was trading at 93% of net asset value. The value of the underlying bonds was $100. The value of the actual stock was $93. Is that a good opportunity? I would say so, assuming the NAV that that this fund doesn't have to liquidate their holdings at fire sale prices. We want to be in a position to buy those underlying bonds at those fire sale prices, which is why we buy individual bonds. We do have some of these closed-end muni funds. These are just kind of to make sure the allocations are right. And they do represent fairly good value when things actually normalize. But the key thing to remember is this: we do not like having these as a core of the portfolio, and this is exactly why.
Yeah. We're continuing to get more and more of a trend on the hiring front. We're seeing layoffs, we're seeing rescinded offers, we're seeing hiring freezes. Recently, Twitter, Redfin, Coinbase, Netflix, Peloton, Carvana, Tesla, a lot of companies with kind of tech components have been rescinding offers and even announcing layoffs. We've heard that Microsoft, Meta, and Uber are dialing back significantly on the hiring. We will get to hear from Mark Zuckerberg will be on Mad Money with Jim Cramer this evening at 6:00. What do you think he's going to talk? And do you think he'll talk a whole lot about the workforce?
I think he's probably going to talk about the workforce and what he's seeing in the underlying economy. I think that the base case is all he talks about is the metaverse and how it's going to change the world. The flip side of it is I do think that, knowing Zuckerberg, there is a potential that he slips up and actually talks about what the business is doing right now, and maybe some of the layoffs or loss of Sheryl Sandberg or loss of some of these other people at the company. I've heard through the grapevine that Instagram has been laying people off or restructuring departments. So there's a lot going on behind the scenes at now Meta, and I'm curious to see what that interview entails. My base case is probably going to be a lot of boring metaverse talk about how in 15 years the world's going to look completely different and it's all going to be virtual. But there's an outside chance that there could actually be something meaningful to take away.
Yeah, I'll probably watch just so I can understand the metaverse. We talked about this in the investment committee meeting. I still don't really get it. It seems like just a little bit too Minority Report-ish, if you've seen that movie. Hadn't talked about Russia a whole lot lately. I know everybody's missed that. But we've got kind of an interesting situation developing with Lithuania, in which we may actually be seeing some signs of the sanctions actually working. Ben, walk us through, kind of what's going on and how that's, impacting Russia and what their response has been.
Yeah, from a Western point of view, I think the goal is to, if you see Putin getting upset, that's usually a good sign, because it means that he's not happy and things are actually hurting. But that's also a bad sign in terms of what could Russia retaliate with. So basically the story is here, and we bring this up because it could have consequences in case it boils over a little bit more. But there's this region called Kaliningrad. Kaliningrad. It is about 1 million people. It's sandwiched right in between Poland's on the south, and then you have Lithuania to the north and to the east. And then you have the Baltic Sea to the west. And so basically it's a way to, it's a strategic place for Russia to have. It's not actually connected to Russia itself. So what Russia has to do in order to supply Kaliningrad with raw materials, with all this stuff, is they have to route stuff over the land through Latvia, through Lithuania, and then into Kaliningrad. Lithuania is part of the EU. It's part of NATO. And they are following EU sanctions, which is basically saying you cannot pass coal, metals, construction materials, or technology through Lithuania if you're Russia. So essentially, you're cutting off 50% of Kaliningrad's imports and really, really hurting the economy and the region. Russia obviously doesn't like this. This is a very strategic place for them. They said that they're really furious with Lithuania, said that retaliation is necessary. They're working on some retaliatory measures, certainly further poking the bear. The US has come out and said that Article 5 is ironclad of NATO, which basically means that an attack on one is an attack on all, and Lithuania is part of NATO. So we now have the potential energy of the conflict just got ratcheted up a notch. So that's something to keep an eye on. We can send you an article if you like, but Kaliningrad is potentially something to watch going forward.
Awesome. We're going to wrap it up there. We will be back tomorrow, talk a little more about Powell testimony and other big headlines. We'll get initial jobless claims, which will be something to kind of keep an eye on, continuing to watch that. We do have, it looks like, a question. Any thoughts on the China-Taiwan situation?
Yeah, we're thinking about talking about this morning. Taiwan, we're kind of continuing to defend Taiwan, and then China has flew 27 jets over the strait yesterday, and continues to increase the tensions there. I think my base case is this is more of the same, but I was listening to some people talk about this over the weekend, and it does seem that if China is going to make a move, this is exactly what it would look like. Continue to ratchet up the tensions, continue to justify why they need to go into Taiwan. And I think that is a huge piece of what's going on right now, and continue to hit frankly the U.S. economy with these very issues. So I think another interesting story is Russia is supplying more and more oil to India and China. In fact, I think there was a story that said that China now imports more oil from Russia than it does from Saudi Arabia. India is telling all of its refiners to look to Russia to supply it with oil because it's a lot cheaper. So I do think you're having a bit of an axis form, funded and subsidized really by Russian oil.
Yeah, it's definitely starting to happen. So definitely something to kind of continue to monitor, keep an eye on, especially in light of the situation we touched on a moment ago. We'll wrap it up there. We'll be back tomorrow, and we'll talk to you soon.